Welcome to Volatility Trading Strategies. So some of you have probably had a similar experience to my own, but managing your own small business can be pretty rewarding. To have the freedom and flexibility to do what you want and move forward with your own vision, it's pretty liberating. But being a small business, sometimes that does require the owner to take on multiple roles within the company. So in my case, of course, I'm the head trader of my fund, but I'm also in charge of the day-to-day administration, as well as client relations, and all of the marketing. So I'm wearing multiple hats here. I do feel like the investing and performance side of asset management is by far the most important part. And not to toot my own horn too much, but I've got that part handled. What I do tend to struggle with is the marketing. I'm introverted, analytical. I'm much more of a quant type than I am a marketing guy. So sometimes I do reach out to the community for help, for video topic ideas, presentation tips. I'm always looking to improve that side of my business. So in last Friday's daily blog post, which I will link to in the description below, but I put out a questionnaire. So today I want to actually go through the results and speak on a few things that I learned. So let's get into the questions. So first of all, thank you all very much. I really do appreciate the support. And I wasn't sure how many people would actually respond, but I'm pleased to report that I had quite a busy weekend here reading everybody's responses and compiling the data. Some people had bullet point answers, and then some others really took the time and gave me some extended responses. So unfortunately, way too many to go through individually, but please accept my group thank you to everyone in the community. So let's get into the questions. How many of my 4 strategies are you currently using? So for those who don't know, what I call my Total Portfolio Solution is actually a diversified portfolio of 3 individual strategies that are very different and uncorrelated to each other. We've got a tactical balance strategy that trades the traditional asset classes, stocks, bonds, and gold. We've got a tactical volatility strategy that focuses on the exciting world of investing in volatility products like XIV and VXX. And then we have an option trading strategy as well that sells index iron condors. So there's 3 main strategies in the fund, and then there's a 4th one that acts as an optional replacement to the tactical volatility strategy for those with lower risk tolerance. The VTS Conservative Vol is also a volatility product strategy, but with less risk of drawdowns and smoother performance because it does trade the ZIV and the VXY, which do display less day-to-day movements. So the question was, how many of the 4 are you currently investing in? I had 121 responses, which was awesome, so thank you again, and maybe next time we can try for 250. But I was so pleased to see the results here because, as many of you know, I always encourage diversification. The truth is, nobody can make forward market predictions with any accuracy. So the best any of us can do is take as many of the high probability trades as we can, to allocate conservatively, and to remain diversified over several strategies that work in different market environments. So to have over 2/3 using at least 3 strategies, this is how my fund was designed to be used, so that was fantastic to see. Question number 2. For Total Portfolio Solution subscribers, are you using the recommended allocations exactly as they appear on the website? So diversification across the strategies is important, but how you go about that is going to depend on your own risk tolerance. About 30% of you said you are actually changing up the allocations, which isn't overly surprising to me. We've got some experienced investors in the community, and several fund managers and financial advisors, so changing things up a bit to reflect personal goals or the goals of your clients, that's just fine. Some people were saying they do a 1/3 allocation in 3 of the strategies, and some other people are reducing the exposure to options and volatility trading down to 20 or 15%. And also for some of you, I may be one of 2 or 3 places that you're getting your signals and your strategies from, so it really does come down to your personal situation. If you are less experienced, consider sticking a little bit closer to the posted allocation. But of course, if you are an experienced investor and you feel like you want to go a little bit rogue, I'm always here to answer questions on all of the strategies to help you make more informed decisions. Question 3. Are you interested in the option trading specific content that I put out? For this one, it was easy. Over 95% of you said yes. Now that may not mean you actually take all the trades, but it does seem like a lot of people are interested in option trading, which is awesome. Remember, option trading isn't about making market price predictions. It's about using math and probabilities to harvest the ever-present volatility risk premium. Now, it's human nature for us to overprice future unknown events, and so traders do need to be compensated for taking that risk. But aside from a few spikes here and there where the fear does seem to be justified, for the most part, forward implied volatility will remain significantly higher than realized volatility. And because of this, option trading will always be an important part of my own personal portfolio. And since there is a lot of interest out there, I will continue to put out option-specific content. Question number 4. Do you execute your trades as soon as you receive the daily email, or are you using market on close orders? Again, another easy one here, because only 3 people said they're using market on close orders. The vast majority said they execute when they get the signal, or within a few hours when they get a free minute or two. Now, the reason I personally use market on close orders basically comes down to my OCD nature. I really do like to have all my trades executed at the same time of day. And market on close makes that pretty easy. Plus, for number crunching and tweaking the input variables I use for my signals, we do have the most market data for closing prices, so for me personally, it does make sense. But I'm not surprised that most of you are doing it shortly after seeing the signal. And especially when we factor in that there's several types of accounts. Cash accounts, retirement and tax shelter accounts. Sometimes market on close orders are tricky because you won't know the final price. Market on close really does work best with unrestricted margin accounts. And because of the complications of different account types, our auto traders also execute shortly after the signal is given. Now, I've run a lot of numbers, and honestly, I can't find any advantage or disadvantage to executing prices at different times of the day. If there was some data showing that the end of day is better or worse, I'd certainly share that and encourage people to take advantage. But to be honest, it's all about the same. Sometimes you feel like you'll get a better execution price than the daily trade signal email, and other times you might get a worse fill price. But to be honest, in the long run, it's going to work out about the same. So we're all just going to execute our trades when it's most convenient for us. Question number 5. Do you read all of my daily trade signal emails, or do you just scan down to see any new trades for the day? So I'll check my ego at the door here for this one and say, honestly, there were 3 or 4 people who said they don't really read them. And about 10% of others said that they may not read them right away, but eventually do try to circle back. So you may have noticed, what I've done recently is within your daily email, right at the top, I put a big bold blue sentence telling you whether there's a new trade required for the day. So for anyone who wants to know right away and then circle back to the content later in the day or in the evening, this is why I do it. Now you might be wondering, why don't I just put it in the subject line of the actual email? So I could do that, but I do feel like there's a little bit of a disconnect out there between how important investing actually is for people's future and how much time they actually spend doing it. Now, the average person works about 1,800 hours a year, making the money, taking care of their families, working towards their retirement goals. So I feel like it's not asking too much for people to spend just a few minutes a day making sure that it's being managed well. Sometimes my daily blog will just be interesting things in the market that day, but other times it'll be things that I feel are important for people to learn. I don't ever want to make people feel like they have homework, but I do try to teach people a little something every day and give you as much value added as I can for your support in my work. And the last question, looking forward, are you generally bullish or bearish on the US economy and the markets? The results? By about a 2-to-1 margin, people are bearish. And some of you very much so. Now, I have to be honest, I just asked this question out of my own curiosity. Actually, I never let my own personal market predictions or those of anybody else influence my trading in any way. I'm 100% systematic. I just focus on the math. I wouldn't care if the general population was 90% bearish or 10%. I'm still going to focus on data mining the input variables and only taking the highest probability trades. So not much to say here. People are generally bearish, and I can certainly understand why. You know, this is the second longest bull market in history now, and hopefully the memories of the financial crisis have not been entirely forgotten. And as well, of course, there are some stretched valuations. But at the end of the day, we'll only know when it's over. The next recession will eventually come, and we'll certainly be ready for it when it does, but right now we're not going to be front-running anything. We all have opinions, but it is important to remain 100% data dependent. We will just take what the markets give us. So thank you very much to everybody who participated, and of course to those who didn't. I appreciate the support. Next time we'll try for double the responses. As I've told many of you, my goal is not to perform well in the short run. My goal is to make sure that every one of you who places your trust in me will hit your long-term retirement targets. That's the end game, so we'll just stay focused on that. Of course, send me any questions that you have, and I'll see you next time. So go ahead and click the link right here, sign up for the VTS newsletter, and when you do, you're going to get full access to all of my trading strategies for a full month absolutely free. And if you are new here, please consider subscribing to my channel. Also, if you have any questions or comments, I'd love to hear from you. So go ahead and leave those in the comment section below. See you next time.